What's up, everyone? Welcome back to From Scratch Trading. If you're trying to figure out how to read a futures chart, choose your indicators, then this video is for you. In this video, I'm breaking down my exact chart setup, the indicators I use. This is the same strategy I'm using to grow my account step by step.
Alright guys, getting into it here. So my 5 indicators. We have the VWAP, or the volume weighted average price, pivot points, the 9 EMA exponential moving average, volume, and the MACD, the moving average convergence divergence. So starting up here with the VWAP shows the average price of future contracts it has traded at weighted by volume. It's like the fair value for the day. Your pivot points are calculated levels R1, R2, S1, S2, etc. based on the previous day's high, low, and close. They are auto-generated support and resistance zones. Your 9 EMA tracks recent price and reacts quickly. It's great for short-term trend directions and momentum. Your volume confirms whether a move is strong or weak. High volume equals strong conviction. Low volume equals weak or possible fake out. And then your MACD shows momentum and possible trend reversals using 2 moving averages. How it's used: it helps you with trend confirmation. Price above the VWAP, a bullish bias. Price below the VWAP, a bearish bias. Support and resistance. VWAP often acts like a magnet. Price may bounce off it or eject from it. Entry filter. If you're long, you may only take trades above the VWAP and vice versa for shorts. Example, if the MQ is trading up and pulling back toward the VWAP, that might be a good sign to place and look for a bounce. So let's hop over, kind of show you what the VWAP is here. Alright guys, so if we take a look at my chart here, these lines are going to be your VWAP. So if you take a look, these flashing lines on the screen here, just pay attention to this sector right here. This is going to be your VWAP. If you actually go on here, you could take a look at the VWAP, which is going to be your middle line, then your upper and lower bands. So what this is talking about is, if we take a look here, this is kind of our average. It's almost similar to an EMA, but what we're looking for is, if we see the candles start breaking above this upper band here, it may suggest a reverse in trend. So I'm looking at it, okay, we can maybe expect a short to come, then vice versa, and so on and so forth. But this isn't always true. So we see here that it comes up above that upper band, drops back down into it, but it doesn't go all the way to our actual VWAP center line here. It stays riding that upper band. We finally see a good break below, shoot up, and then it finally starts dropping below down to this lower band here, back up, and you can kind of see how that works there. Now again, this isn't something I would use just by itself. You're supposed to pair this with the other indicators, so let's go ahead and talk about that as well. Pivot points. How to use them. So you have your support zones and your resistance zones, or support levels and resistance levels. They're potential bounce zones or rejection zones. The pivot P often acts as a gravity zone or a midline. Example, if the price breaks above R1 and holds, you might look to R2 as your next target. So let's go see what this means. Alright guys, so let's go and take a look at those pivot points. So I'm going to turn off the VWAP here, turn on my pivot. As you can see, we have our S1 and S2, which is your support, your P zone here, which is basically your middle zone, and then we have our resistance zones up here. So a good way to see this is if we take a look at the 15-minute chart, come over here to the 30-minute chart, you can see how it differs to an hour to a day a little bit, compared to a 5, a 3, and so on and so forth. We're going to stay here on the 15. So we have the previous day close, which is this pink line right here. And if we go to today, this is where the market opened here at 8. So this is pre-market. We have market open here. It bounced off of that resistance zone right in that pre-market And then once it opened, it shot up, didn't necessarily hit R2, and we saw it reject back down, come back down to this pivot, up, down, but we didn't see an actual breakage, strong breakage here in the R1 until we got to this candle here at 9:45. This R1 is set at 2031.34, and then you can kind of see it playing around this, and then finally breaks down, coming down to our support zones for the night, the 9 EMA or your exponential moving average. This is a trend guide. Price above the 9 EMA tends to be a bullish trend, or below a bearish trend. For your entry trigger, you can enter on pullbacks to the 9 EMA during strong trends, or exit or warning signals where the price crosses again the 9 EMA. It may show momentum weakening. Example, if an uptrend, you might enter long when the price touches the 9 EMA and shows a bullish candle bounce. So let's go take a look. Let's take a look at this downtrend right here with the 9 EMA. So we had here at noon, 12:15, had a good up bullish trend, started reversing, and you can see right here, okay, we got to the 9 EMA line, came over here where this candle opened, shot up, and then you can see it drop well below. The next candle, what I want you to take a look at is we didn't come back and touch that 9 EMA, suggesting a more bearish trend. And as you see here, kind of danced in the middle before taking this nice long bearish candle here and the one next to it before going sideways again here. Or vice versa, if we come back and look here from 2 days ago during the night, we are trending under, touched the 9 EMA here, surpassed it, decent way up past the 9 EMA, and then this next candle didn't come up. And then if we actually turn on our pivots here, you can see that this is a resistance zone. So it shot up past the R1, and the next candle didn't break above the previous, so that's an indicator that it could be shooting back down here. Volume. How to use it. Look for volume spikes on breakouts or breakdowns. Avoid entering when the volume is flat or dead. Usually this means that it's choppy, or maybe that it's moving sideways. Use volume to validate key levels. Example, if price breaks above R1 with a big volume spike, that breakout is more likely to stick. So let's go and take a look at down here is going to be our volume. Now remember, if you didn't change your color, my blue is on the normal chart what green would be. And we're going to turn on our pivots for this as well. So we have small volumes here in this pre-market open for yesterday, and once we start getting to that resistance 2 coming up here, you can see down here in our volume it's starting to spike up with that pressure to sell, and then that's when we have this nice long bearish into the next little bit. I'll try to reverse it until it finally moves back down below that resistance 2, or sorry, 1 pivot here. But what we're looking for here is a slew of things. So this is obviously during the night, but this is a good reference point here. So we can see we're coming down to that middle zone here. We're not exactly at the resistance or support, but where we are at is we're trending on that lower band of the VWAP here. We have pretty dead volume, and then all of a sudden it starts to pick up here at about 8:30 at night. We could see that our histogram here flips, our signal line, or sorry, our MACD line is going above the signal line here, goes up past the 9 EMA, and goes into a pretty good bullish trend right here for these next 2 candlesticks. Where vice versa, if we take a look over here today, or sorry, yesterday at about noon to 1, we are trading here in the lower band. That's where it's moving. Decides to actually pick up some momentum. We can see that the histogram bars here are slowing, but it doesn't quite have a lot of strength here, and soon after starts slowing down, coming back down into a huge bearish trend between about 1:15 all the way down to about 5:30 in the afternoon. How they all work together. The VWAP bias plus dynamic support and resistance only take longs above the VWAP with confirmation. Pivots predefine your support and resistance levels, the targets for bouncing zones. Your 9 EMA short-term trend and momentum. Ride the trend, pull back entries near the 9 EMA. Volume confirms breakouts in strength. Look for volume spikes at key levels. And then your MACD or momentum reversal confirmation. Only enter trades as your MACD agrees with your bias. Now remember, you want to use all of these combined instead of just going off one alone. Wait till those strong confirmations between a good amount of your indicators here to just help you best succeed in trading. Other than that, guys, hope you enjoyed the video. Have a good one.
Alright guys, that's the full breakdown of how I'm currently setting up my charts. If you're just starting out too, I hope this gave you a clear picture of how to build a setup that actually works for you, not just copy someone else's strategy blindly. If you got value from this video, go ahead and hit that like button and subscribe so you don't miss the next one. I'll be showing some live trades soon, walking through entries, exits, and lessons learned as I grow this account. This is From Scratch Trading. I'll catch you in the next video.